Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. Is a large farm products company a good investment? In this video, we will be analyzing if Archer Daniels Midland stock is a buy. Can Archer Daniels Midland, stock ticker symbol ADM, bounce back? Let's find out. We have so much to cover, so let's go ahead and jump right in. Cue the logo. Let's start off with the price action. Looking at the one-year chart, we see that Archer Daniels Midland had a CAGR of about minus 13%. Zooming out to the 5-year chart, we see that Archer Daniels Midland had a CAGR of 6%. Archer Daniels Midland had been a slow gainer over the long term, but the short-term history shows a lot of pain. Now let's hop over to market share and take a look at Archer Daniels Midland's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we see that Archer Daniels Midland is categorized as a food company. Expanding the Farm Products tab, we can see that Archer Daniels Midland has the largest market share of the companies in this category. But the red color indicates that the company is not growing its market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Archer Daniels Midland, ADM, and see that the market share is an astounding 11.35% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Archer Daniels Midland commands a lot of food spend, but it has been shrinking over time. The 5-year market share CAGR for Archer Daniels Midland is minus 0.9%. This means that Archer Daniels Midland has lost market share over the past 5 years. If we start in 2021, we see that the market share was 11.69%, 12.63% in 2022, 11.26% in 2023, 10.4% in 2024, and 11.35% over the trailing 12 months. Though Archer Daniels Midland is a big company, they are losing precious market share in the long term. Let's take a look at the fundamentals to learn more. Gross margin is 6%. This is a very thin margin. Revenue has compounded at around minus 1% over the past 5 years and has shrunk to $83.9 billion most recently. Sales peaked in 2022 and have declined since then. Still, $84 billion is a ton of revenue. When we look at cash flow, we see that operating cash flow has worsened at a 36% CAGR over the last 5 years. CapEx has worsened at a 9% CAGR. As a result, free cash flow has also worsened at a 63% CAGR during this time period. This is just horrible. Management needs to figure out how to lower costs immediately. Cutting CapEx by at least 80% would be a good start. Weighted average shares outstanding have decreased over the last 5 years, going from 566 million shares in 2021 to 485 million shares most recently. Archer Daniels Midland has been buying back shares. This is what we want to see. Unfortunately, share buybacks are predicated on the company generating sufficient free cash flow to finance the buybacks. We can already see that the rate of buybacks start to decline. Now let's view return on invested capital. Return on invested capital has worsened from 5% in 2021 to 3% most recently. This is a very low return on invested capital value for such an established company, and it continues to trend even lower. This is not good. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage, as well as inventory control. Going from 54 days in 2021 to 53 days most recently, Archer Daniels Midland has gotten a little more efficient over time. However, most of that improvement was lost when the value rose off the 2024 lows. Again, this is a bad sign that the company is losing the ability to control its already bad efficiency. Now, let's look at Archer Daniels Midland's debt. The net debt to EBITDA has increased over time, going from 2.5 in 2021 to 4.4 most recently. Given that the company is profitable, this value means that their debt is mounting and earnings are slipping further. Last, let's compare performance to the benchmark. If we perform a backtest comparison of investing $10,000 in Archer Daniels Midland versus the S&P 500, we find underperformance for Archer Daniels Midland. In that comparison with the S&P 500, $10,000 invested in Archer Daniels Midland would have grown to $19,069 versus $35,579 if invested in the S&P 500. This is an annualized return of just 7.03% for Archer Daniels Midland versus 14.29% for the S&P 500. Archer Daniels Midland investment would have been more volatile, with a 23.75% standard deviation versus 15.44% for the S&P 500. Archer Daniels Midland actually outperformed the S&P 500 in terms of the best year performance, for which Archer Daniels Midland grew 39.95% versus S&P 500 31.22%, but underperformed the worst year performance, where Archer Daniels Midland fell 27.52% versus the S&P 500 18.17% fall. In terms of max drawdown, Archer Daniels Midland fell 48.10%, more than twice as much as the max drawdown of 23.93% for the S&P 500. Archer Daniels Midland also massively underperformed the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. The Sharpe ratio for Archer Daniels Midland was 0.32 versus 0.81 for the S&P 500, and the Sortino ratio was 0.47 versus 1.26 for the S&P 500. Archer Daniels Midland has been trailing the S&P 500 for a long time by nearly every metric and is clearly the subpar asset. Still, Archer Daniels Midland stands as a key company in the food industry. In any event, is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Also, don't forget to turn on your notifications if you are watching on a mobile device. Now let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Archer Daniels Midland. It is a food company with a gross margin of 6%. The 5-year revenue per share CAGR is 4%, and the 5-year free cash flow per share CAGR is minus 17%. All of the values are bad. The only reason revenue per share seems to be increasing is because of aggressive share buybacks, which, as mentioned earlier, are at risk of ending because of the dwindling free cash flow. A return on invested capital of 3% is bad. Next, the cash conversion cycle of 53 days is very high and has been trending to move even higher. Concerning debt, a net debt to EBITDA of 4.4 means that it would take Archer Daniels Midland nearly 4.5 years of earnings to pay down their debt. So from a fundamental standpoint, Archer Daniels Midland remains a terrible company. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, is minus 60. This means that analysts expect Archer Daniels Midland earnings to decline in the future? Yuck. Archer Daniels Midland was founded in 1902 and quickly became a global leader in agricultural origination and processing. The company transforms agricultural commodities like oilseeds, corn, wheat, and cocoa into a wide range of products, including vegetable oils, protein meals, sweeteners, flours, and ingredients for food, beverages, animal feed, and industrial uses like bioenergy. Headquartered in Chicago, Illinois, with approximately 42,000 employees worldwide, Archer Daniels Midland plays a crucial role in the global food supply chain, connecting crops to markets across 6 continents. While the company has captured the largest share of the food market, it has been an absolutely poor performer from the fundamental and share price standpoint. In a highly competitive industry like agricultural commodities, losing ground to rivals can really hurt. Declining free cash flow means less financial flexibility for Archer Daniels Midland. Finally, there are glaringly obvious signs of increasing inefficiencies within the company. This will mean higher operating costs and lower profit margins, which nobody wants to see as an investor. Still, the company is not at risk of going out of business. They've been around for a long time and have a massive, integrated supply chain that's tough for other players to replicate. Still, the financials indicate the company will continue to be a dud in the short to medium term. Overall, I give this company a 0 out of 10 using my proprietary scoring system. I do not like Archer Daniels Midland, but have tremendous amount of respect and concern for investors who do own the company. Many thanks for watching. What do you think about Archer Daniels Midland? Share your thoughts below. It is always great to hear from you. Check out some more videos right now, and don't forget to put your money where your mouth is.